Hey, good morning, everybody. It's Mike with smartoptiontrading.com. You can visit me there or on Twitter at OptionsMike. I hope everybody's doing well. It's been a very rough couple weeks here in the markets. And the markets here are showing some signs that they're not quite sure what they want to do. And what I often find the best thing to do is when it gets like this is to keep looking at the charts and try to find clues. So the first place we want to go to today is the S&P 500. And when you look at the S&P 500, you can see a bunch of different lines I have on here. First of all, we have this big long uptrend, that blue line marking this uptrend that we pushed against and now we've fallen off from. As we come down, you can see this red line marks a series of lower highs we put on the market. What's so important about that? That means that the market is creating a series of lower highs and it has downward pressure on it right now until we can break above that resistance line, which was yesterday's high. Just to give you an idea, we went right to it. And that's pretty much where we stopped at the 390 level. Overall, SPY continues to hold in much better than the Qs. We're above the 50-day. You can see that purple line there with the two blue arrows on it. That designates twice now we've come down and twice now we've bounced off the 50-day, showing that remains strong support. And we know that a 10% correction in this market is somewhere down around the 356 level, that red dotted line. So we have a ways to go to get there. What's bothering this market? It's a lot of things. One, it's ran a lot since the November lows, a huge move up. The other thing that's going on is what's going on with the short-term yields and interest rates going up. There's fears of inflation. For what it's worth, the United States Fed, they want to get some inflation in this market, and they don't seem overly concerned about it. But right now, what does have the market in a tizzy is rates are going up. And when rates go up, borrowing money gets more expensive. And the companies that are getting hit the hardest are tech companies. So if you look at a chart here on the QQQs, you can see the Qs have had a much bigger sell-off than the S&P 500. And that's because a lot of tech companies tend to be more leveraged. They tend to carry more debt. And if interest rates goes up, it's going to cost them more money to keep repaying back that debt. Just the interest rate charges on it. And that's why we're seeing a little bit of action here. So what's going on here in the Qs is we've come on down. We are still below the 8 and the 21 day. That's where we stopped yesterday on that nice bounce. And you can see there we've lost the 50-day multiple times. So for me, when I look at what's going on with the Qs, that gray line, that is roughly a 10% pullback. That's around the 304 area. That's the 100-day moving average. And that's the area we're going to watch if the market wants to do some more selling. But one of the reasons the market bounced so much yesterday, specifically the Qs, is when you look at what's going on with this oscillator I use. This is an oscillator that measures overbought versus oversold in the market. And you can see here very, very clearly, see that red line? We got a very big oversold signal yesterday. So coming into Monday morning, we had a big oversold signal on the NASDAQ, and we had a big rally on the NASDAQ. You can see we haven't had a signal like this since back in March. It's been very tough getting oversold signals in this market. So this is the first time we had a real nice signal in a while, and we got a very nice bounce off of that right now. Now we got to see if this continues. And if it continues, the one name I want to watch here is Apple. Apple yesterday had its first really nice day in a long time. All their stores are reopened. Warren Buffett gave them a vote of confidence. And you can see this blue uptrend line, it's held up on it. And if it's going to continue now, I wanted to see if it can get to the 50-day. The 50-day is the purple line. I put a nice little red arrow there for you guys so you can easily see it. If we can get to there, that would put it around 132 area. That would mark a change in character in this chart. Taking back the 50-day could open this move for back up to the highs. If this market is not yet ready to go, you could watch for a buy off the 112 area where the 200-day is. That's the green line down there. I also put a red arrow down there so you guys can see it easily. So that's where I'm at today, guys. This is a name I want to keep an eye on because if Apple's strong, generally the markets are strong. So if this starts to wake up, typically the markets will move with it. Thanks for listening today. I hope you're all doing well. I'm Mike Pizzani with smartoptiontrading.com.